Right, so we'll get you all those headlines in detail, but first straight to the Dalal Street, where markets saw a strong start, stumbled at lunch, but then saw a sharp recovery in the last hour. The Nifty reclaiming the 10,850 mark, led by gains of 0.5%. The Sensex too reclaimed 36,000. The Bank Nifty saw wild swings post-lunch, but then settled with gains of 0.75%. Mid-caps also sulked in trade yet again, with that index ending flat, but with a negative bias. Surbhi Upadhyay joins us now with the key highlights of the day's trading action. Surbhi, mid-session scare today?
Quite an interesting session we had today, where there was intraday volatility, but towards the end, it was the bulls that came out right on top. In fact, a V-shaped recovery is what we got in the last hour of trade, and perhaps a lot of credit to that really has to go to IndusInd Bank, because that was the stock of the day, starting off the earnings season on a very optimistic and positive note. More on that stock coming up in just a bit. The only problem today, once again, was the mid-cap underperformance, because at the index level, again, we've seen a bit of red on the mid-cap screens. Let me now come to the stocks, and why am I calling IndusInd Bank the stock of the day? The intraday graph will really tell you the story. Numbers came in 35% credit growth, and the moment the management clarified that they have more than adequately provided for the island FS exposure, the stock simply took off, and there was a big pole vault. It took a lot of its banking peers up with it. Axis Bank continued to rule the roost with about a 3% up move. Gains on ICICI Bank, gains even on HDFC Bank. So that was the way it played out. Beyond some of these large banks, there were other support pillars for the market. And they included names like HDFC, ITC, HUL, and even Infosys. Some of these IT stocks that were downbeat in the afternoon, they managed a bit of a recovery from the lows. Now let me talk about where the caveats were. On the losing side, oil marketing companies obviously very sensitive, because crude oil prices were almost at 60 by the time we closed off trade. So that was a weak pocket of the market. And Yes Bank chose to sit out of the banking rally. So we'll keep an eye out on this stock as we go forward. On the mid-cap screen, there were quite a few gainers, not as if there weren't any green specs. Praj Industries, there's a lot of excitement about whether there's anything more coming on the ethanol policy. So almost 11-12% up move on that stock. HT Media, DB Corp, some of these media stocks extremely excited with this 25% increase that the Government of India is offering on ad rates. Now, that really sparked a major rally. Ashok Leyland and Motherson Sumi, some of these beaten down large mid-caps, they found takers today from the recent lows. On the losing side, Dilip Bilcon is a stock that really stood out. They have some company-specific issues there. NMDC, despite the buyback announcement, couldn't really hold up. And the duo of Bandhan Bank and Groove Finance, they continue to have their share of troubles. Stock down between 5 and 7%. Interesting day. The question is whether now the market can take aim at that level of 10,950, which has proven to be a very difficult top over the last several months.
Right, Surbhi, many thanks for joining us with all the details from there. But from equities, let's also take a look at the currency market, where the rupee opened 15 paise higher today at 70.05 to the dollar versus Tuesday's close of 70.2. However, it did come under pressure later on the back of a surge in crude oil prices. The Indian currency weakening amidst growing speculation that the government may soon come out with a package to support farmers as well. And let's get you a CNBC TV 18 exclusive. The GST Council is set to meet tomorrow, and we learn from sources that its 32nd meeting, it will focus on revenue mobilization. Sources saying that the council may consider a special report prepared by a group of ministers on mobilizing revenue. Timsy Jaipuria is here with the details. Timsy, what are you picking up?
Well, as you rightly mentioned, the Revenue Mobilization GOM has submitted its report, and this special report will be considered by the GST Council on January 10th, that is tomorrow when they meet. Now, if you see the analysis that government data shows right now, it shows that the revenue shortfall during the period of April to December has slipped back again to 13%. This number had recovered to 10% during the period of April to November. But yes, after the dismal performance of November figures which were recorded in December, the figure has again slipped back to 13% odd. Now, if you see the overall moving of states, how states are performing, the worst performing states and union territories continue to be Pondicherry with a revenue shortfall of about 42%. Now, this again becomes a major concern, because a lot of states and union territories are below 20% of a revenue shortfall. And remember, government has said that they would be compensating states, that too at an annual growth of 14%. That means 42% negative will be first given as a compensation, and then a 14% growth also will be given out as a compensation. So it becomes heavy on government's pocket to compensate such states such as Pondicherry, Punjab, Himachal Pradesh, Uttarakhand, Jammu and Kashmir. Even Delhi has again slipped back to about 20% of a revenue shortfall, which was earlier seen as to be one of the good performing states with almost a revenue gain. So if you see all this math across India, out of 31 states and union territories, only 5 of them continue to remain in good healthy figures, and rest all are under a good shortfall figure. So let's see what is the final move that government takes tomorrow when they consider this special report. Back to you.
Right, Timsy, many thanks for bringing us all the details from there and what to expect when the GST Council actually gets into a huddle. But representatives from the non-banking financial companies highlighted the liquidity constraints plaguing the sector when they met, in fact, officials from the RBI earlier today. Shaktikanta Das, who succeeded Urjit Patel as the new RBI governor, was also present at that meeting. Now, which is his first, in fact, with the NBFC sector. Ritu Singh has been tracking that meeting, and she joins us now with all the details. Ritu, what did the NBFCs highlight during this meeting?
After meeting heads of public banks, private banks, MSMEs, the Reserve Bank of India officials with its new governor, Shaktikanta Das, met with representatives of non-banking financial companies, and we understand about 12 to 13 large NBFCs were part of this meeting. We understand from sources that the dominant theme for discussion today was the issue surrounding liquidity in the NBFC sector, and also some of the regulatory changes that have been sought by the NBFCs present in the meeting today. One, of course, is, the industry felt that there was a lot of negative sentiment created about NBFCs in the wake of the IL&FS crisis, whereas they believe there's not really any solvency issue with the rest of the industry, and everybody must not be painted with the same brush. They have sought RBI support to open more avenues for capital raising when it comes to the NBFCs, specifically, small and mid-sized NBFCs, according to the demands put forward by the industry today. They said must be allowed refinancing options from Mudra, also, the creation of an official platform through which NBFCs can interact with bodies like the Reserve Bank of India, something along the lines of the IBA for the banks also. In addition, there were securitization guidelines that were taken up. There was also a demand made by some NBFCs that RBI allow, NBFCs with assets of over 1,000 crore rupees to allow taking deposits from the public. But largely, it was a freewheeling discussion with no real agenda. But yes, as always, we got the feedback that the Reserve Bank of India had a willing ear to listen to all of these issues that are faced by the industry.
Right, Ritu. What about the other meeting that you've been tracking where banks met officials of the cash-strapped Jet Airways about the airline's turnaround plan? What's the latest from there?
That's right. Officials from Jet Airways and its partner Etihad Airways met with State Bank of India officials. Remember, SBI is the lead banker in the consortium to Jet Airways to discuss the turnaround plan for the company. We're given to understand that in the meeting, SBI made it very clear in no uncertain terms that no fresh loans would be granted to Jet Airways until the results of EY's forensic audit on Jet's book is completed. In addition, we understand, given that Jet defaulted on the 1st of January, the RBI FEP 12 circular kicks in, which means in 180 days, lenders will have to finalize the resolution plan, failing which the company would be headed into bankruptcy. So under this, they're working on a financial restructuring where a portion of the debt would be converted into equity, which means banks will end up holding stake in Jet Airways. In addition, they've also sought that Naresh Goyal, along with Etihad, bring in fresh capital into the company. And therefore, this restructuring, once implemented, would result in Naresh Goyal losing, majority control in Jet Airways. It has been made very clear that, bankers do not really want the current management with Naresh Goyal at the helm to continue, but a compromise has been reached, and we understand that they are agreeable to his son, Nivan Goyal, continuing in his board position. Of course, the stakeholding would be reduced significantly from 51% to under 20% once the restructuring is completed. Do remember, there's almost 1,700 crore rupees of repayment due between now and March for Jet Airways, and to ease that, if the restructuring proposal is cleared by all of the lenders, it is possible that Jet Airways may also be granted moratorium during this period.
After the bell now, a day after the Lok Sabha cleared the bill to provide 10% reservation to economically weaker sections. The centre has tabled the bill in the Rajya Sabha. The debate over the bill is currently underway in the upper house, and several opposition leaders have questioned the timing of the government's move. Now, countering the opposition's charge, BJP members have said that Prime Minister Modi is fulfilling a promise made in every party's manifesto. The opposition also raised the Citizenship Amendment Bill issue in the Rajya Sabha. The Congress and the TMC slammed the government for the move and once again highlighted the violent protests which have erupted across the northeast. However, responding to criticism, Home Minister Rajnath Singh reiterated that the bill is not only for Assam but will be extended for migrants in other states as well. And staying with parliamentary action, sources say the budget session of the parliament will commence on the 31st of January and the session will last till the 13th of February. The government is expected to present the interim budget on the 1st of February. And on to a CNBC TV 18 exclusive. The debt-laden SR Group has cleared 80% of its debt. That's the word coming in from Group Director Prashant Ruya. While speaking to CNBC TV 18, he also said that the group will complete the repayment of SR Global's debt by March this year. Talking about the road ahead for the group, Prashant Ruya said that the company will now focus on 4 key sectors: metals and mining, infrastructure, services and oil and gas. Here's a slice of that conversation.
We have repaid about 80% of our group debt, which works out to 1,37,000. What that means is about 20% is left over. More importantly, the 4 main lines of business which we have, which is metals and mining, oil and gas, infrastructure and services, they continue. We still remain focused on all 4 sectors. SR Steel is something which one has to, we'll see what comes out given what's happening in the courts. And independent of that, the group will have about $11.5 billion of revenues in these 4 businesses. And now with a much stronger and lighter balance sheet, we will look at growth opportunities both in these sectors and in other sectors going forward.
Okay, fair enough. You spoke about how the debt is just 20% left. Can you help us understand the exact amount and how much time would you take to complete that payment? No,
there is no further payment, major payment plan. We pretty much repayment program is pretty much come to an end. We have one majority, nearly 60 to 70% of the balance debt is really in the power portfolio.
The debt repayment in power is going to be via the process.
It's more of a refinance. There is no real refinancing. There's no.
What is the exposure right now in terms of debt for SR Power?
I think it's about 18,000 crores, maybe.
18,000 crores. So in the next 2 quarters, you will be able to refinance and bring that down.
Not all of it requires refinancing. A portion of it requires refinancing. We will do that in the next 2 quarters.
Okay. Any plans of bringing an investor on board for SR Power?
No. There are no plans.
Not at this point in time. Okay. Let's talk about the last tranche of repayment that you did, Prashant. 12,000 crore rupees was the last tranche. Take us to where the capital came from, and that was paid to the Indian banks.
No, so basically SR Global, it was the last tranche. So principally about a year and a half ago when we did the SR Oil monetization with Rosneft and Trafigura in August 2017, we repaid about $5 billion of our debt at SR Global, and the last tranche was about 1.75 billion, which was recently given back. The only lender left now at Global is VTB. Principally, the SR Global by next year, or sorry, now the current year, will be debt free.
So by the end of this fiscal, by March, you're expecting to be debt free.
Yes.
So exposure with VTB is going to be cleared.
Yes.
Can you very quickly tell me what is the exposure left for SR Global, the amount in terms of the debt, consolidated debt at this point in time?
I don't want to. Okay, it's about $1.6 billion.
On to a CNBC TV 18 exclusive, we learned that e-commerce giant CNBC TV 18 in fact learns that the company has faced a technical glitch, Amazon, which led to a data breach of sellers' business records on the platform. CNBC TV 18's Mugdha Warrior is standing by with the exclusive details from there. Mugdha, can you tell us about the scale of this data breach and also tell us, has it been corrected now?
Yes, this problem came to light on Tuesday morning when several sellers logged onto Amazon's platform to download their monthly sales reports. These monthly sales reports, also known as merchant tax reports, are usually downloaded by these sellers between the 8th and the 10th of every month in order to file their GST returns.
Now, some of the sellers I spoke to said that the reports they downloaded this time carried incorrect data, as well as data of other merchants on the platform. Now, this is what has raised concern among sellers that their own business data could have been exposed to other merchants as well. Now, these merchant tax reports mainly carry sensitive business data of these vendors on the platform, including their orders processed, the sale volumes across categories, as well as the inventory. The scale of the data breach is not clear, but Amazon has over 4 lakh sellers on its platform across the country. When contacted, Amazon India said that the problem had been identified on Tuesday and that it was a technical issue which had been rectified within a few hours. And Amazon now says that the sellers now have access to the correct merchant tax reports. Back to you.
Right, Mugdha, many thanks for joining us with all the details from there. Now, Apple CEO Tim Cook feels that the trade tensions between America and China were a temporary phenomenon, and that was in the interest of both nations to reach an agreement. Now, Cook was speaking to CNBC's Jim Cramer days after the tech giants slashed their first quarter revenue guidance, primarily on the back of weak iPhone sales in China. Now, Cook remains optimistic about improving trade ties between the US and China. Let's hear out what he had to say.
Issues are all occurring at the same time that we do have China. You were very abject about China and the 100% of what we didn't think of the upside that went away. There are issues involving perhaps not boycotts, we know that's off the table, but patriotism in a strange way, meaning that, you know what, if I can get a Huawei with a subsidy, why should I buy an Apple? It's conspicuously American. How long can that last?
Well, I think here's what we saw in China specifically. The Chinese economy, it seemed to us, began to slow maybe in the second half of the year, and it was on some sort of rational trajectory. We believe, based on what we saw on the timing of it, that the tension, the trade war tension with the U.S. created this more sharp downturn. I believe that's temporary because I think that when you really look at it, it's in both countries' best interest to come to an agreement. It is a complex, very complex trade agreement, and it needs to be updated. But as I've said before, I'm very optimistic that this will happen. And so that clearly will be good, not only for us, frankly, but I think more about the world in general. The world needs a strong U.S. and China economy for the world economy to be strong.
And with that, it's a wrap on this edition of After the Bell.